Good morning. Welcome to Stock Market Today. It's Monday, August 24th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics, back from vacation. Hope everybody had a great week. You can follow me on Twitter. I'm at Dan Russo _CMT, and Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today where you can sign up for a free email where I get a lot of the content for this show and also give you daily stock ideas to consider that hits your inbox every trading day before the market opens. So let's dive in. U.S. equities were mostly higher on Friday with the S&P 500 and NASDAQ closing at record levels. Growth and momentum factors continued to be standouts while value and cyclicals came under pressure last week. Remember the rotation trade everybody was talking about that I said it was just a pause and favor growth? It's likely to reassert. Well, we'll take a look at how that played out in the week that I was gone. Tech was the best performer at the sector level, while energy and materials were notable laggards. Treasuries were mixed with the curve flattening. That's going to hurt the financials. Dollar was stronger against the major crosses. Gold was little change. Crude oil down 1.1% on Friday. So much like the earnings reports, economic data continues to surprise to the upside relative to pessimistic estimates. We saw the August flash PMIs in the U.S. as well as existing home sales for July both come in better than expected. And as we get to the desk on Monday morning, we have futures up about 70 basis points to get us started this week as coronavirus treatment and vaccine headlines are supportive to global risk appetite here this morning. Asian equities were higher overnight. Big gains in Hong Kong and South Korea. Japan and China slightly higher. European markets are rallying. Major bourses over there up over 1.5%. Treasuries are mixed. Dollar is slightly better against the yen, off slightly against the euro. Gold is up 30 bips. WTI crude up 70 basis points to kick it off on Monday. That starts with the S&P 500 and the NASDAQ at record levels. Bumping up support here in the near term, 3,200 to 3,300 for the S&P 500, raising it this week. Below that, 3,000 to 3,100. Round number resistance at 3,400. Maybe. I mean, we're 3 points away. It's kind of semantics. But round numbers do matter. It does appear we're going to blow right through it here this morning. We'll take a look. People care. I don't care about round numbers, but people do, which is why it kind of crops into the analysis. It's just a number. There's no difference between 33.99 and 3,400 or 3,401. Okay. We are overbought or closer to overbought in the near term. Chaikin money flow is strongly bullish to get us going on the week. So not a ton has changed really in my view in the week that I was gone. I mean, obviously I wasn't completely disconnected. I was paying attention to what was happening. And largely my thesis is played out to a T. Okay. New highs for the averages led by growth, NASDAQ. Inflation creeping up. We'll take a look at commodity prices a little bit later on in the show. Growth outperforming value, breaking topside. So for those of you who, from a strategic standpoint, have set yourself up along with the view that I've been advocating for the past few weeks/months, congratulations, you're getting paid. And that still remains the case as a new week gets underway here. So let's talk about our key points. Major ETFs have bullish and very bullish ratings this week. As I did our work this morning, SPY, Qs, IWM, all with bullish or very bullish ETF power gauge ratings here at Chaikin Analytics. The commodity uptrend confirms our rising inflation theme. Gold continues to consolidate in a bullish trend. We're not really going to touch on it here, but not a ton has changed. Huge rally in gold. Consolidation. I do think that consolidation will resolve to the upside, but we're still in it. Treasury moves higher as for a brief bout of selling. Remember, before I left, I showed you the chart of TLT, which we're going to revisit here, and I said it looked compelling for a snapback. And for those of you who took that trade, congrats, you got paid. Futures point to a higher open today, as I said. Major indices from a power bar perspective, still strong for the bulls. Dow tacked on 73 basis points on Friday, 12-3 bulls to bears there. S&P 500, 162 to 74 after a 35 basis point rally on Friday. NASDAQ was your outperformer. Again, 35 to 7 bulls to bears there. Small caps lag down 76. 622 to 299 bulls to bears. So still solid. Bonds uptick, sending yields lower. Tech, because in a slowing growth world that sends bonds higher, yields lower, growth is leadership. 23 to 7 bulls to bears for tech, which added 1.2% on Friday. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major markets are mixed. Let's hit our stock of the day now. Full disclosure, I own this one and I like the setup here. PayPal, bullish stock. Part of the IT services group that has been strong. Strong trend above the trend line. Strong industry group. We talked about it. Recent earnings announcement, gap the stock higher, consolidation. I think we're going to resolve topside. We have a bullish stock outperforming the market, oversold with the indicator beginning to round higher. Bullish money flow. I love these setups. This is essentially a growth and momentum stock that is consolidating within the context of an uptrend, giving you an opportunity to add to an existing position or open long. Right? Manage your risk. Set your stop at the level that it works for your risk tolerance and your time frame, because nothing is guaranteed. But I own the name. I like the setup, and I think it's pretty compelling. I'm featuring it in my note today. I'm featuring it here for you on the show. And as always, with full disclosure, if there's ever a name that comes up that I own, I will let you know that that is the case. Let's hit our sector tracker now. Movement in the major sectors over the last 5 days of trading. There's tech, discretionary, and comms at the top of the list. Folks, that's your growth, risk on, beta trade. Okay. Risk on type trade. This is the type of leadership that we would expect to see if my thesis is playing out. We're seeing it. A little bit of defensive in the middle there with staples, REITs, and healthcare also higher over the past 5 days. And now your cyclicals have come off. Okay, materials and industrials are the two cyclical groups that we like the most. Right? If we think about the 4 cyclical areas of the market, materials, industrials, financials, energy, the ones that we like the most are materials and industrials. Those have the best trends. Now they've come under a little bit of pressure here as growth really reasserted last week. So something to bear in mind. But the ones that we've continually said to avoid, financials and energy, big underperformers over the past 5 days of trading. So kudos to those who have avoided those groups. You've sidestepped the pain, right? And a lot of investing is sidestepping pain, right? Avoiding the groups, stocks, sectors, you name it, that can blow up your portfolio and really make your investment process hard. Focus on relative strength. Okay, tech, growth, right? That's been leadership. So speaking of, our industry in focus today is software and services, which has outperformed the S&P 500 over the past 6 months by about 10.5%. Power bar ratio 57 to 17 bulls to bears is very strong. That's a measure of future potential. It's currently ranked number 8 of 21 subsectors. And some of the names there that may be compelling that warrant more work: Kachi, C-A-C-I, Sykes, S-Y-K-E, and Conduent, C-N-D-T, all with very bullish ratings. Now, the fund itself is neutral, which kind of surprises me, right? But it's quantitative, it's unbiased, it's unemotional. So it's a neutral rating. Now, we do have 57 to 17. We do have a strong trend. We do have outperformance. So the neutral rating could just be a function of maybe just a little bit overbought from a trend perspective here in the near term. But I mean, this is what we look for, right? We look for relative strength. We look for uptrends. This is a great area to be looking for ideas. The fund itself, neither overbought nor oversold. Money flow bullish. You have 57 stocks to drill down on in the software space to look for ideas. Let's look at Friday's movers and shakers, gainers and losers. Apple, $2 trillion market cap for this name. That I think about that. I mean, just think about this. A stock a company the size of Apple, from a market cap perspective, tax on 5% in a day. Leaders lead, winners win. Okay, it's been the case. A lot of people trying to make the case, too far, too fast. The trend is up. Manage your risk, right? Manage your risk so that you're out when the trend is no longer up. Same goes for NVIDIA, right? Earnings and guidance beat up 4.5%. I'm long Apple. I'm long NVIDIA. I talk about them. I tell you. Estee Lauder EL up 4.5% following their earnings announcement and some upgrades. John Deere, nothing runs like a deer, folks, up 4.4% following their earnings announcement, which beat expectations. And Ulta is a very bearish stock that was up 4% for no reason that I could tell from a company-specific news standpoint. Loser side of the board, Keys down 6 3/4 following their print. Diamondback, actually an energy stock with a bullish rating, which we haven't been able to say for a long time, but down 3.5% with the energy complex on Friday. Newsday, didn't see anything company-specific there, or with Nielsen and LSN, both bullish, both down 3.5% on Friday, and APA. Also, the energy complex, which was weak on Friday, down 3.25%. APA is neutrally rated here at Chaikin Analytics. Let's dive into the charts now as growth reasserts. This is normally a chart that I would show you on a Friday, but I was gone for a week. These themes played out, and I left you with this chart on the Friday the 14th before I was gone, and I said, you have this consolidation above the trend, momentum still good, above, RSI and bullish ranges, likely to reassert to the upside. Okay, that's been my view. I've pounded the table on it. For those of you who positioned or stayed positioned accordingly, your process got you paid. Breakout from a consolidation. Notice that on pullbacks, we held bullish ranges. And notice the Qs on a relative basis, QQQ versus SPY, breaking topside as well. So it appears that this consolidation is resolving to the upside. Could it be a false breakout? Of course it could. Nobody knows. I don't have a crystal ball, folks. I'm just taking the odds game and trying to play it to the best of my ability. Okay, so we just take the weight of the evidence. Uptrend, momentum, consolidation, right? Weight of the evidence supports a breakout. That's it. We're paying attention to what's happening in other markets to triangulate the view. We're watching that copper to gold ratio turn over again. Okay, we're watching everything and then saying what's likely to happen here. Growth reasserts over value. Commodities continue higher, and here's the other portion of our theme, which is inflation. This is the not so happy part of the theme, if you will. Rising prices generally not well received by consumers, but it does happen to be the case as commodity prices continue to trend higher. Now we've closed this gap. We're testing the 200-day moving average. Momentum remains strong with the RSI in bullish ranges, so it looks like a consolidation within the context of this trend, with solid kind of support zone right here between 1275 and call it 1330, 1350. This is the second part of our theme, right? Slowing growth, favor growth, rising inflation, right? So favor your inflation hedges. What's interesting is we've seen a stabilization and an attempt to move higher by commodities on a relative basis. So you have to start to think about what that means to you from a strategic asset class allocation perspective. Right? Do you start to allocate to commodities? Maybe if you run your portfolio that way. I know I do, right? I have an allocation to commodities in my strategic portfolios because they're beginning to outperform, and because this trend that I've been talking about for the past, 6 weeks, month and a half at least, is beginning to play out. So keep an eye on these commodities, which are continuing to work higher. You know how I feel about gold. We've talked about the precious metals trade ad nauseum. And then as I'll leave you with a rebound in the long bond. The Friday before I left, TLT was at 163 and change, and I said it was overdone to the downside. You want to look for an opportunity. So hopefully you took advantage. You got a 3-point rally quickly here as bonds catch a bid going forward. That'll wrap us up. Take us for a test drive, chaikinanalytics.com/test drive. It's great to be back. I will talk to you tomorrow.